Hi friends, Dr. Joe here. I hope you all are doing great and welcome to this video. In this video, we are going to discuss about a price action observation, which I have seen for many years. Whenever there is a big rally, you will see the price moving in a particular way. So there are a few things that you need to observe about this. So what are those observations? Now this happens in both in a bullish rally as well as in a bearish rally. But we are going to discuss about a bullish rally. So first I will tell you the important aspects of this. So let us look at the chart and see how you can identify this price action before a big rally happens. So number one is there has to be a clear rally to the downward direction. That is number one. Number two is the price has to reach into or very close to a strong support zone. Okay, so here looking at the previous price action, I had drawn a support zone. So there was a support zone over here. So the price actually came into that support zone. In fact, went a little bit below the support zone also, but it's okay. See, a zone can be a little bit big, a little bit small. So here we are not going to see whether the tail was in it or the body was in it. It's basically a support zone, and there are chances that the price can reverse from here. Now, what is most important is that the price has to immediately bounce off that support zone. Immediately. It should not make a lot of candles over there. So you can see in this support zone over here, one, two, three candles were there, and then immediately one, two, three big candles came. That means there was a demand for purchase over here. The prices started going up. And then after that, you see the price reached a resistance and then came back down. But now when it came back down, it did not make a new lower low. It stopped somewhere in between. Now, which is that area that we are interested in? So when the price bounces off a support zone, you will see the price will make two or three big candles. Yes. So that is what is your demand zone. Those two, one or three, how much ever candles are there, that is your demand zone. So in this case, we will take these first two candles as our demand zone. This is our demand zone. The price went up, came back into this demand zone, and then quickly went back out. This demand zone is the observation that I am discussing about in price action. Whenever the price make a low and that low is a good support zone, and when the price bounces off that support zone quickly, creates two or three big candles, draw a demand zone in the same structure or the same height of those one or two candles, and wait for the price to retrace back into that demand zone. And once the price retraces out of that demand zone, you look for the first bullish candle. So this is the first bullish candle over here. You wait for the price to close, and then you can keep your stop loss below this low, and that's it. Then you wait for the price to rally. In this particular case, we can see the price rallied really high. It went to an extremely high level, but when you are trading, when you are investing, you can watch the markets creating higher lows, higher lows, higher lows, higher lows, higher lows, higher lows. The minute it starts creating lower low, you can exit the market. For example, here it started creating lower lows. So this is where you can exit the market, or you can keep a target and you can exit the market. If you think that you have made enough, like 1:5, 1:8, 1:10, you can exit the market. So friends, I hope that this observation about price action, which I have just shown you, you will use it in your coming trades and investments. I've been using this pattern for a very long time. People give it different names. So some people can call it an order block. Some people call it a demand zone. Some people say that big institutions started buying and then the price went up. Then they waited for the price to come back down so that they could fill their orders again. So there are multiple reasons for it. But my observation is purely on the price action basis. Whenever the price bounces out of a support zone quickly and then comes back again and it comes to the zone where those big candles were there, this is an indication that the price is going to bounce out of here. But you have to wait for the price to bounce. Okay, do not enter quickly. Now remember, trading and investing, there's a lot of risk. So just because you see this price action, do not go and invest all your money over there. Have your risk management in place and invest only what you can risk. If you lose, you should not feel bad about it. So you invest 1%, 2%, something like that. And friends, if you like the way I'm creating these videos and sharing my observations, please like and share these videos. So like you, there can be many others who can learn from these videos and improve their trading and investing. And friends, if you're still not subscribed to my channel, kindly subscribe to my channel and ring the bell icon. When I see increase in my subscribers, I feel motivated to create more such content. Friends, I always keep saying, if you really want to make it big in the markets, you need to practice. You need to have patience and persistence in the market. And keep learning, keep growing, and keep getting better every single day. The more you learn, the more you're going to earn. That's all in this video. Thank you. Namaskar.